Today, start working on not touching your face, because one main way viruses spread is when you touch your own mouth, nose, or eyes.
Right now, stupidity and fear are pretty much driving the entire stock market in this weird economic black swan event. So I'm going to break down my six-figure dividend stock portfolio, how it's being affected. I want to explain to you a little bit of how my job as a full-time magician is being affected. And then I want to explain to you where do we go from here. So ladies, gentlemen, let's hop right into this. Boom. I like that.
Drop it.
Welcome back, my passive income investors. I like to what is officially a black swan event causing mass correction in many sectors of the market. And in an attempt to be 100% transparent on my financial independence retire early journey, I'm going to start by sharing with you my portfolio breakdown, and then I'm going to explain to you some details that are even probably going to affect my personal working career if these market conditions continue. But to just kick this off, taking a look at the overview on my iCloud numbers spreadsheet, apparently my portfolio is worth $110,000. I think this needs to be updated. But overall, just to show you guys the ones and zeros within the actual portfolios, here's my Scotia iTrade accounts where I have three portfolios worth $134,804 Canadian dollars. And in my Royal Bank account, we've got about $3,634, bringing the total to about 138,000 CAD, which surprisingly is still up $8,000 on the year, but is down from the 151K all-time high. And this is primarily due to a few factors, one of them being that the utility sector has actually performed very well through these market conditions, and the fact that I took some profits off Tesla this year when it had an amazing rally. And I know a lot of you might not be seeing positive gains this year. As many of you in our personal stock chat group have mentioned, this is the first time you've ever experienced volatility in the market, and some of you are even really uneasy about this. I'm not personally worried by any of this as a long-term dividend investor because I'm looking for those deep discounts, which are finally out there, but it's not coming with the greatest of news, of course. Before I get into any of my specific positions, I just want to talk a little bit more about the news. There's a lot of memes going on right now about how, CNBC and a lot of these news outlets really like to drive this media and drive fear and push it because it does good for their bottom line, because there's more people making clicks, there's more ad revenue, and it's weird that you can make money off a downturn in the market, and specifically a lot of money, because you can compare this to even this video you're watching now. As I talk about this, I will probably be making ad revenue off the downturn in the market. But I think it's important to recognize what is serious and what isn't. And we try not to make investment decisions off what we don't know. And if I can recommend something before you start, losing your mind and moving up north and building a little cavern away from everybody, just head on to CDC. These guys are the ones that provide the most accurate information. And if we just scroll through here, guys, just to read some of the news, I recommend coming to the risk assessment because right now it's very low. As it says right here, for most of the American public who are unlikely to be exposed to CV at this time, the immediate health risk for CV is considered low. People in communities where ongoing community spread with the CV that causes, I don't want to say the words because I'll get flagged, though still relatively low risk. So even with communities that have spread, they're still saying it's fairly low risk. Healthcare workers caring for patients with CV are at elevated risk of exposure, obviously because they're helping to cure it. But where things get a little paranoia on this side is if we head on over into what may happen, if I can scroll down here a little bit to get at the top of the screen, more cases of CV are likely to be identified in the coming days, including more cases in the United States. It's also likely that person-to-person spread will continue to occur, including in communities in the United States. It's likely that at some point, widespread transmission of CV in the United States will occur. Widespread transmission of CV would translate into large numbers of people needing medical care. At the same time, schools, child care centers, workplaces, and other places for mass gatherings may experience more apt to see, if I said that right. Public health and healthcare systems may become overloaded with elevated rates of hospitalizations and deaths. Other critical infrastructure, such as law enforcement, emergency medical service, and transportation industry, may also be affected. Healthcare providers and hospitals may be overwhelmed at this time. Non-pharmaceutical intervention would be the most important response strategy. So even though they say there's low risk, they are saying that, this has the potential to become something much more serious. But the problem is we don't know. And right now, Matt Money made a good point that this is affecting such a tiny percentage of the world, though it is finally starting to spread out, and we're starting to see the impacts in other countries far away from, China and things like that. As first quarterly reports start coming out on these companies, we're going to finally start seeing the overall impact of all of this. But until that happens, I don't think it is wise to make any drastic changes to your investment strategies unless you are highly leveraged and risky companies. And it's hard to define risk because in every market cycle or a market correction, depending on what's causing it, different parts of the sectors are going to be hit the worst. Taking a look at my personal portfolios to see what sectors are getting hit the worst, and then I'm going to explain to you some of the things that might even start personally affecting my job. But just scrolling through my TFSA to start it all off, we got Bank of Nova Scotia, Canadian Imperial Bank, Financials getting hit the worst. Wells Fargo right now is on the top of my buy list, which I only hold it in my Royal Bank account right now, and I definitely want to start adding to the position as the dividend yield is at, I think, a 5.5% right now, as it is just on a massive decline. But taking a look at the rest of the sectors, like I said, utilities are one of the primary reasons holding up most of my portfolio. Mind you, the Canadian stocks aren't getting hit nearly as bad as the US. Taking a look at something like Altria, Apple, British American Tobacco, Microsoft, these ones are my heavy hitters right now that are just taking the biggest tanking. My Southern Company is still holding up quite nicely through all of this. It's only down $5 from its all-time highs of around that $70 mark. And taking a look at the other half of my portfolio, like the RRSP account, guys, where I hold Tesla, which is actually still up quite nicely in the portfolio overall, but considering this is all profit sitting in here, I can't really complain. But Facebook taking a rather big hitting, and I still think Facebook's going to be one of the best performing stocks once we start seeing the first quarterly earnings come in. And I'm surprised Johnson & Johnson, with the volatility it's been having, that it's not actually up overall, just considering the fact that it is a medically related company. But as we all know, and I don't have to mention this any further, but right now, guys, the stocks that are getting hit the heaviest are stocks related to my industry. Many of you know I'm a full-time magician. I personally know magicians that aren't able to perform on these cruise lines, and they are only just now getting back to work after taking a good 2 or 3 week leave due to the news that was going on around these cruise lines, considering Carnival Cruise is one of the largest employers of magicians. I think there's only 2 major cruise companies anyways, but Carnival Cruise is definitely the largest by far, with a PE right now of 6.3 being down another 2% as of this moment today, with a dividend yield of 7.3. But how reliable is that dividend? We won't know until we see the full impact of their first quarterly earnings, and hopefully things rebound. But again, we don't know how severe this news gets. And I know there's a lot of people out there, you could be watching like Financial Education, driving people to buy these really cheap stocks right now, considering we saw even Warren Buffett picking up some of the airline stocks like Delta. I think the airline stocks might be a little safer, but if you want to dip your toes into, say, Carnival Cruise Corp right now, I'd honestly recommend waiting. I do not like making personal investment decisions off what I don't know. Paranoia level is through the roof right now, considering it's only affecting like such a tiny minute amount of the entire population. We're talking about like 0.00 something percent. Only 100,000 plus cases have been confirmed, but this could become more severe. And if it does, companies like Carnival are only going to get worse. These are the kind of companies that I personally don't enjoy owning because they just don't perform well in any kind of market correction like this. And again, guys, taking a look at the airline stocks, they're going to continue to get hit. I wouldn't be picking these up right now. I wouldn't even consider cost averaging down until we see the rest of the fallout. My investment philosophies have not changed through this market cycle. I am still going to be cost averaging into those top tier companies. Now is not the time to take on extensive risk. You want to buy companies that are going to be reliable. Companies like 3M are on a big discount right now. I'm really looking at the financial sector. Like I said, I'll be buying more Wells Fargo. But overall, you just need to sit down, relax, take a breath, and just kind of start focusing on your core positions and make sure your core positions are good positions. But if I can make some recommendations in this current cycle, guys, stick to some really solid companies. This is the time that if you've never experienced a market downturn, to realize what good core positions can do for your portfolio in circumstances like this. Because if you were diversified the way I am diversified, your portfolio might be seeing a less hit, just like mine is. Obviously, because I hold a lot of growth stocks, they're going to be taking the biggest hit. Growth stocks don't do well in circumstances like this, but to have that exposure to utilities, to have that exposure to some very odd sectors in the market, like my GEO group, like my REITs, like RioCan, they're just not getting hit the same way these other companies would, and they kind of offer some stability through these volatile moments. And I like the fact that my passive income and my dividend income is very diverse between this YouTube channel, our Shopify store, and all these dividend stocks that kind of show up my dividend pie here, I'm not too concerned about my income. I think my income is going to be very sustainable and reliable because I'm not exposed to airlines. I'm not exposed to these other companies. But with my personal working job as a magician, I could foresee if things start to escalate, I might be losing work because right now I'm heading into a very busy season, and I'm hoping I'm not going to get any further affected because I have to go to a lot of public events over March break. I'm going to be doing about 13 shows. If you guys think you'd like to see what I do for a living, I do not update this channel at all. In fact, I haven't updated it since my last show I did last year. Maybe consider liking. If the like ratios start going up from this video, maybe I'll start posting a video here once a week showing you guys what I do on weekends for my job. And right now I can only gauge it out day by day and hope that I don't lose contracts because I am very reliant on my income as a performer. And like I said, with the cruise lines and how people were being affected by that, I was starting to see it creep into my industry, and now I'm getting a little concerned. But let me know what you guys think. Would you like me to continue doing magic videos? Go slap a like on this page. I'll leave the link in the description below. And if you guys want to support this channel specifically, and you also want to track your portfolio similar to how me and Matt Money do it, consider checking out thechartmaster.com. We offer a variety of portfolio trackers that aren't monthly fees. They're one-time, really cheap fees to help you track multiple portfolios or other passive income sources. And it'd be a great way for you guys to support this channel in these volatile times. Not that you have to, of course. You can always just come right back here, slap a like, and subscribe. And you can watch me post about this content absolutely free of charge. But I'd love to know what you guys think about all of this. I'd love to know what you think about my personal career as a magician. And I would love to hear about how this is specifically affecting your portfolio because everybody is getting affected differently. And it's just, I'm really happy to say that my portfolio is able to sustain right now. And I'm going to be focusing on these really core positions this year. Like I said, I'm not trading any of this. I'm not pulling money out and putting it on the sidelines. I wish I would have more cash, but I am in tax season, so I'm going to be stuck paying some taxes and some other things. I got some repairs going on. It's not the best time for me on the income side of things, but hopefully as the year gauges out, we're going to see the fallout of what is going on in this economic time, and hopefully my job will pick up and YouTube will continue to grow for me. But I love you all very, very much. You all make this possible, so stay cool, stay awesome, and I look forward to catching up with you tomorrow.